Welcome to the channel. Don't forget to like and subscribe. Today we're going to talk about what you need to know about insurable interest. Insurable interest is one of the principles present in the insurance world. As you know, insurance exists as a guarantor for our various interests in the future, with the aim of getting a sense of comfort and security from every hard work we have done so far. In the world of insurance, insurable interest means that it is very important in the course of the insurance process itself. Therefore, before taking insurance, knowing the principle of insurable interest is very important because for the good of the insurance continuity process, you must really know everything well. Insurable interest is one of the insurance principles that can protect anything related to financial loss. That the emergence of insurable interest is caused by financial problems that are often experienced by investment holders. An insurable interest relationship can be recognized with regard to ownership of property prices, rights, interests, body and soul, as well as legal responsibilities that can be insured. Basically, insurable interest is very closely related to indemnity. Basically, another term for insurable interest is compensation that is closely related to indemnity. In general, the meaning of insurable interest is to obtain the insured interest for damage or loss of the insured entity, such as property, rights, interest, life and body, and etc. You can understand that insurable interest is the right to carry out insurance that arises from the existence of financial relationship between the insured and the object insured, which has legal protection or is legal in the eyes of applicable law. Why between the insured and the beneficiary? Because these two objects are an important part of the insurance process itself. Therefore, insurable interest is one of the very important insurance principles and it is in favor of the insured and the beneficiary. Therefore, every insurance holder will not experience things that are detrimental and worrying. So finally, the peace and comfort that is the goal of taking insurance can be obtained. Why there should be an insurable interest? You will actually get this question by knowing how insurable interest works. In simple terms, how it actually works is the same as how the compensation process is carried out. The way it works is done by collecting risk exposure methods that protect policyholders from financial losses. Every insurance company has many methods and tools to cover any loss related to the insured thing, such as vehicle, health, life, income, and property damage. The way it works specifically applies to people or entities that have a logical sustainability or age assumption, setting limits on adverse and unexpected events. In addition, the insured interest may also cover any estimated loss or loss of an individual or entity. Some of the things we need to keep in mind as the key to understanding how insured interest works are the following. Insurable interest is the basic principle of every existing insurance policy. The insured interest can be an object which in the event of damage will be in the responsibility and financial burden for the policyholder. To be able to obtain an insurable interest, each policyholder needs to purchase insurance from the asset or entity. The policy must not create harm, especially in the moral hazard that makes the policyholder to intentionally cause loss in order to get insurance. Insurable interest in life insurance is closely related to indemnity. Generally, many people equate insurable with indemnity. The similarities between the two are closely related to compensation. Although similar and identical, both are different terms with specific meanings. However, the principle of indemnity and insurable is that the policy owner will get every right when they experience a loss. However, the claim earned does not constitute a reward or compensation earned. In the explanation regarding how the insurable works, it is explained that the policy issued must not cause harm, especially moral harm. The principle of compensation that is carried out at random can create a moral crisis by intentionally taking action to get insurance. The link between insurable and indemnity is related to the claim process related to compensation. This linkage is the key to the relationship between insurable and indemnity itself. Thank you.